One of the big changes in the triple B, as we're calling it, was changes to charitable deductions and deductions overall. So high income taxpayers will only be able to get a 35% tax benefit for donations in 2026. But right now they're able to get the full 37%. So there's incentive to kind of lump more charitable deductions into 2025. And then that helps bring down current taxable income, gives you that extra 2% benefit. And on the other side, there's actually an additional charitable deduction for people who don't itemize starting in 2026. So it's interesting. Higher income individuals want to push more of their deductions to 2025, and people who might not be able to itemize deductions would actually be better off pushing those charitable deductions to 2026.
Paul, there's also an interplay between the newly increased ability to deduct state and local taxes and people's taxable incomes, because above a certain threshold, that ability to take the extra deduction is phased out. So this really complicates planning for both when to try to collect income if you have control over that, and also when to pay certain state and local taxes. If, for example, as some places that I've experienced, you have a big property tax payment that's due in January, but you may be able to make that in December of a given year. So that's really complicated, that element of tax planning for people who are near the bubble on the income side, hasn't it?
Yes, the tax code keeps getting more complicated. Every time they make changes, I think we all hope for simplification, just kind of figure out how much you need to raise and set the tax rates and make life easy. And they never do that. It's always just adding on top of what is already existing. And so a lot of these changes that have been made with the last few sets of revisions have involved calculations that work off certain income numbers, and some numbers are part of the income number and some aren't. So this just complicates things further. But yeah, state taxes for the last few years with the SALT cap, it just was a non-decision. There wasn't much to think about. And this SALT cap change can really change things for people. If you have a $40,000 SALT cap and a $30,000 standard deduction, it changes the strategy for a lot of people.